Today, so the bears finally showed up. We got the lower highs that we were looking for. We know the CPI numbers come out tomorrow pre-market, and that's going to dictate the short term. Just some follow-up on what I talked about in yesterday's video with FTX. I'm sure you've seen more articles and a lot more information about it over the last 24 hours as that's been going down. But it's not looking good. And just wanted to let people know, even if you've been the biggest bear on crypto and it's all a Ponzi scheme, this is not the time to take a victory lap. There are people's lives who are being ruined right now, and just dealing with a lot of private messages from a lot of people. It really just puts things into perspective of what this game can do to people, and it's not good at all. So as always, be protective, and you can use all the stop losses that you want, but there are still risks on top of that. There are risks with the exchanges. There are risks with our stockbrokers. So it's just a taste of a company blowing up, and just being aware that we have to prepare ourselves for all worst case scenarios. And I know for me personally, I spread things out. I diversify as much as possible for this reason. If Coinbase goes under, I'm going to take a hit, but it's going to be manageable. If Fidelity goes under, that's going to be rough, but maybe I should spread that out a little bit more. And if real estate takes a hit, it'll be rough. But again, diversifying as much as we can so we don't expose ourselves to these one-off scenarios which can wipe everything out. Even if it's a 1% chance or less, we have to protect against that as a possibility. So if you are one of those that was significantly affected by this, it's going to take a lot of time to get over, but honestly, I would treat it like grieving, and get some grieving books and treat it as if someone in your life has died, and it's going to take time, and you have to give yourself time and go through a process and learn a lot about yourself and come out the other side with motivation for other things in life. And feel free to reach out. Happy to talk to anybody. chartingmandan@gmail.com. S&P 500 daily lower high is set, and now it's just a question of, there are only two things that are happening from here. Bullish reaction to CPI, and we head back to test our recent high to try and confirm a daily uptrend and try and confirm a weekly higher low. Or bearish reaction to CPI, daily downtrend confirmed, and then the probability of seeing a new fear low increases. And today is just another example for me, example number 857 of I need to get to futures trading because I had a big old bear position right here, couldn't hold it overnight, triple top, plenty of opportunities to short on the futures, and this is the move that I was looking for. So I will be a futures trader eventually, maybe for the new year, we'll have to see. But NASDAQ did the same thing, daily lower high set. We know the fear lows are a lot closer in the NASDAQ than they are in the S&P 500, so a bear break is more likely in the NASDAQ, and we're watching these lows. We only have really two key support levels we care about. For QQQ, it's 259.08 and 254.26. And for SPY, there's a few levels, but 368.79 is the key short-term level that we're going to be keeping an eye on. The dollar is starting a daily bounce here. This is now our second key break with zero follow-through. We may get follow-through depending on CPI, but at the moment, bear breaks with zero follow-through has us zooming out and scouting a flag. This is a potential monthly bull flag right now. And obviously, if it were to confirm a monthly bull flag, that means markets are hitting fresh fear lows and a new wave of fear is coming. So keeping an eye out for that to be a possibility. If that is not going to be a possibility, we have to set a daily lower high and break support. Anything under 113.15 is a lower high. So bears have to prove it still. Bears are doing a good job on these moves, but as I mentioned yesterday, we're getting to support extended, overextended to the downside. So we break support and don't see any follow through. So we have to get follow through if we're going to be looking towards monthly EMA 12. Otherwise, we can very quickly be shifting back to look at the recent highs. All about CPI. Semiconductors, daily consolidation underway. We saw NVDA starting to show us relative weakness pre-market, and it followed through. So lots of space for a daily high or low here, anything above 180.39. We can drop 5% and still have space for that daily high or low, 5% more. But we know bigger picture, weekly EMA 12 resistance and a longer term downtrend. So the bulls have a lot of work to do. It's just a question of, can bulls maintain the daily uptrend, which for me is this. So can we set the higher low and keep the uptrend? XLF and XLV have been our stronger sectors, but they double topped. And so the question here is, do they double top and roll over? Because the market is going to get ugly again, in my opinion, if we see daily downtrends confirmed in XLF and XLV. If that happens, that pretty much means the NASDAQ is at fresh fear lows. So the key support level for XLF is 128.70, and for XLV, it's 128.70, and for XLF, it's 33.08. For XLF, there's still no red flags on this daily chart, but we know that they could develop into red flags with just a couple more red days from here. IWM, we have noted, has been one of the weaker names, and here we are testing the low already. If 174.11 breaks, we confirm a daily downtrend into that weekly consolidation. So we're on the verge of weekly consolidation, and we know it's a weaker sector as growth names are weak. ARKK, fresh fear lows. PLTR after its earnings, fresh fear low, well, close to fear lows, not new ones yet. Snow was a growth name that we've been watching. It's been all bear the last couple of weeks, giving back a lot of this bounce. So growth names are weak. There was a brief period where we had some strength in there, but certainly short-lived. The biotech sector, daily bear flag confirmed. We're heading back down to our support zone between 75 and 76. So weaker names, weaker sectors, biotech, IWM, QQQ, stronger XLE, which may be shifting, but XLF, XLV. And SPY is in the middle, made up of all of those parts. Metals pulling back a bit today with the dollar trying to bounce. I'm watching the 12-hour higher lows, and I'm watching for a daily higher low. I may be interested in scouting a daily higher low entry in silver and in the junior miners. We'll have to see how it shakes out, but I do anticipate a daily higher low is the more likely scenario here on this pullback. And the daily consolidation has not officially started yet. And again, CPI is certainly going to have a major reaction here. So oil is giving red flags for bulls. Oil confirmed a weekly trend change straight into a loss of the daily uptrend. This is a potential monthly lower high being set. So we will have to confirm a daily downtrend with a lower high and lower low after next bounce to increase probabilities of a monthly lower high. But it's notable to break resistance straight into a hard drop. And we know natural gas has been weak the last couple of days as well. So with that, energy is finally starting to see some cracks in the bull's armor. We closed below daily EMA 12 for the first time in over a month. So this is a scenario where it's possible that our relative bull, the energy sector, rolls over into a laggard bear. We saw the solar sector already do this. Solar sector back here did it. And utilities did it. They were the strongest sectors at that point in time, and they fell apart. So the question is energy going to do the same thing? Technically still a daily uptrend, a little base of support, 87.65. But we're on the verge of weekly consolidation, and then we'll be looking for a weekly higher low with a lot of space for it to form. Lots of space for an hourly lower high to be the result of the next bounce. And you can see the bears really poured it on into the end of the day here, magnifying that move down. So bears are going for the jugular, and it's just a question of whether CPI is going to give a push to the bears to help them, or whether CPI is going to save the bulls. That's what essentially it boils down to. Tesla has been in free fall, and that continues, looking like after hours we're at fresh lows. So Tesla is a falling knife. Tesla has Bitcoin exposure. Bitcoin's a falling knife. But 179.83 breaking. This is now the lowest level that we've seen in multiple years. And I'm looking down in the 150s to 160s, previous resistance. But it's all bear. And again, I'm a bounce trader. I love them. I'm not playing bounces in this market. I'm not playing crypto bounces. I'm not playing broader market bounces. I don't care if I miss them. The risk and reward of playing counter trend in this market environment is not worth it. I would rather miss a big bounce and play the higher low, whether it's on the hourly or the daily, and have a stop level to be going off of. Because there have been people trying to catch the Tesla falling knife now for days. It's just not a good trading strategy right now. Amazon's a falling knife as well. I attempted a little bull swing position yesterday, stopped out when 88 broke today, and that's my first bull swing trade loss in any market in a good while. I've mostly not been taking the trades. I started taking the trades a couple weeks ago, stopped out break even on Bitcoin, on MARA, still in the green on INTC, but now red, small loss on the Amazon stop out. So that for me is okay. Now you stop looking long and patiently wait for a long setup to try and present itself again from here. If Amazon gets to weekly oversold, I will definitely be interested in the IRA. Ideally, it gets there in a free fall drop, so the daily is crushed as well. But again, it's just historically, if you look back for longer term, what happens if Amazon hits weekly oversold? It's the best time you can buy. Maybe this time will be different, but if we were to keep dropping down to the low 80s or upper 70s into weekly oversold, that is the kind of move that I personally would just scale into for some positions. Considering at the moment, I have no exposure in any individual tech or XLY related names. All right, so that's it. Bears are confident after today. Again, it's going to require a bull CPI reaction and a little mini short squeeze to change things. Otherwise, there is a cloud overhanging markets right now because of crypto and because of this company blowing up like this. So stay protective, stay patient, preserve that capital. Bears are looking for daily lower highs, for hourly lower highs. Past couple days, I've only been looking bearish in my trades. And I'm going to stick with that as long as daily lower highs remain. So simple statement, if this daily lower high remains on SPY and QQQ, I'm not looking long. We'll see what CPI gives us. Remember to zoom out. There's a lot more important things in life than these flashing numbers. Stay safe. Do good things.
So here we have a plum tree, and this plum tree has played the oversold bounce on temperature too soon and too aggressively. So we've been in a downtrend in temperature all throughout the winter. Big oversold bounce recently, 70-degree days, but we're about to drop to lower lows overnight this weekend to 15 degrees. So all this energy, all this capital that this tree has put into these flowers, it's going to hit its stop loss and they're all going to die. And we're not going to get any fruit on these flowers because it was too soon. That's why fruit farmers have to do a whole bunch of hedging, because if you have a frost that is late in the season, you can have no fruit, you can blow up your account and liquidate everything. These are tulips. They've put in some entry into playing the oversold bounce. They're scaling in slowly, but they are preserving their capital, their energy, by not putting out their flowers yet. They're waiting for a trend change to confirm on temperature to ensure that they don't get stopped out.